Good evening, everyone. I got a really good question the other day, and I've been trying to make a video, and I apologize, I've just been busy. But the question was like, what is a good buy and hold strategy, and what kind of stocks would you recommend? Now, keep this in mind. Whatever I recommend, I guarantee you can go to the next video of someone else and they'll recommend something else. And then you go to another person and they'll recommend something else. So at the end of the day, whatever I say, you guys have to take accountability for your trade. So I just want to be real, I just want to keep that in mind. And think about the climate in which you're trading. Think about the politics, think about the news, think about what's hot right now. You gotta think about a lot of that stuff, and you don't have to be a considered news junkie. You don't have to be a person who studies various outside factors in a macroeconomic type of situation to make good choices. You just gotta think, one, what are you interested in? Because ultimately, when that stock goes up or down, which it will, you got to justify reasons of why you're holding that stock. Two, what is the growth potential of that stock? Will it just flatline? Will it just consolidate and not do anything? Will it actually increase? And then three, what's the consumer? Who are you targeting, If you're Nike, you're targeting apparel, right? If you're Costco, you're targeting like food and products for like home. If you're targeting makeup, you're targeting beauty products. You got to think about these different things. Now, if I were to recommend to you guys a a buy and hold strategy for a long-term basis, meaning 1 year or more, because I myself live in the Bay Area, I'm surrounded by tech stocks. I'm biased towards tech stocks because that's in my area. That's what I know. That's what I hear about on a daily basis. That's what I see. Like that's what I would recommend. Now, is that the right recommendation for you who's watching this video right now? Maybe not, because you might live in Florida or New York, where things in your area are up and coming, and you think those are a better buy than tech stocks. But I'm on the West Coast, I'm in California. So I hear about, tech companies coming up all the time and making like IPOs and new highs and like new technology and all that. So that's the kind of the stocks I would recommend. So I'd be like, you should buy Facebook, you should buy Google, you should buy Amazon, you should buy Netflix, you should buy Salesforce, you should buy, eBay, you should buy PayPal, you should buy all those like tech companies that are kind of disrupting current consumer brands, current economic brands that are kind of like long-term staples and are changing it. Like you look at Amazon, it's changing how people buy everyday consumer products. Like you look at companies like Macy's, Kohl's, J.C. Penney, like all like stores like that, they're losing sales year after year because online retail is becoming more and more of a catalyst where people are more interested in it. They don't want to go to a store where they have to be around, and it's dumb to say, but like they don't want to have to be in a crowd of people. They don't want to have to wait in line. They don't want to have to go through sections of clothes just to realize that what they want isn't there. They want to go on to like Amazon and just type in like jeans and have like 37 different brands of jeans come up and several different categories and customer reviews and all that, and it's all literally at the touch of their fingertips. So like if I were to say, hey, if you want to do a buy and hold strategy, I would say buy Amazon. And I would say buy it when it's on a downward trend, because you don't want to buy it when it's at its peak. So if we look at a chart of Amazon right now, it's doing pretty good. Like, this is just a 5-year chart, and you see it's peaked right here at around 830 or 840, we'll say. And the current trend is coming up, and it's coming close to hit that 840. Now, me personally, I don't like buying stocks when they're at their peak. I don't like buying stocks when everyone else is buying that stock. You know what I mean? I don't want to buy when it's expensive. I want to buy when it's cheap. I'm a cheap person. I have no problem admitting that. I want to pay less for something and get the most gain out of it. I want to buy something when it's off season. Like, I want to buy a AC unit in the winter. Like, who the hell is going to buy an AC unit for their home in the winter? Nobody, because you're going to be buying a heater. You want to keep your house warm. So AC units are going to be cheap because no one's buying them. But when you buy in the winter and you hold it till the summer when everyone's buying AC units because they want to keep their house cool and it's hot, you've been buying AC units since the wintertime, so you bought it when it was cheap and no one cared about it. So now when it's in the summertime and it's a hot product and everyone's buying it, now it's at an all-time high and you're selling it. You're profiting. While everyone's buying it, buying because it's a hot product, you were smart enough to buy months in advance, anticipating that this trend or this product would go up in value in a certain season or a certain climate or whatever, and you profited from it. So that's like the buy and hold strategy. You buy it when it's cheap and you hold on to it. Now, you could buy for like a multi-year strategy where, like, let's say if you bought Amazon way down here in this dip right here at 482. And I'm going to tell you right now, a lot of people look at this, 482 is already expensive, and you would be right. But understand that, and I should make a video about PE ratio and all this to fully understand what it is. But basically, when you're buying, 482 might be inexpensive versus 800. Like, you could buy a stock and it's not in season and it's at 480, and then you could buy it at 841 or whatever this is right here, and it's in season and it's more expensive because it's a popular thing. Amazon's highly overpriced. I'm not gonna lie. Like, this is a very expensive stock, but it's such a good company that in the long term, I'm talking years from now, like maybe like 2020 to like 2025, like, this stock will hit $1 trillion market cap, like, easily. Like, right now, it's at 383 billion, right? I mean, it's a huge company. It's no joke. But you got to think long term when you're thinking buy and hold. You're not thinking like, I'm going to buy today and sell next week. Like, no, you're going to buy this and you're going to hold it at minimum a year, at minimum 1 year. And the strategy you got to think about is what stocks will grow over a multi-year basis. And like I said, I'm biased towards tech stocks because of where I live and what I hear and what I see. So if I were to buy a company, if I were to recommend a strategy, I would say tech stocks. They are more volatile, so they will have sharp up and down movements. But in the long run, like, you see this chart right here. You see a 5-year chart. It went up 323% in 5 years. It went up 40% in 1 year. Those are great numbers for a buy and hold strategy. If you look at another big tech company that I also would absolutely encourage you guys to buy if you were interested in, is Facebook. Now, Facebook, over a 5-year time, it went up almost 250%. Over a 1 year, it was almost 35%. These are fantastic numbers for a long-term buy and hold strategy. But you gotta understand the business. Like, I'll give you a great example. I bought into Disney in January 2016 when there was a dip right after the first rate hike. that the Federal Reserve placed, and it was like a huge thing. Like everybody freaked out and thought it was like the end of the world. No joke. It was so stupid how people overreacted to this. But this, like, every stock went down, and it went down sharply. I bought that dip, and I bought Disney around like $90, and then I want to say like within a week, it shot up to like 110 or something like that. And I just sold it. And I was like, I made my profit. I bought in like at 80, 89, $90, and then it went up to 110 and I sold it. I got in, I got out. I kind of did like my penny stock strategy. I didn't hold it very long. But the point I'm trying to make is if you're long Disney, whenever there's those dips like that, when people freak out on the market, when there's a bad quarterly report, when, you hear like somebody gets hurt at a theme park, a movie doesn't do good, it doesn't meet the numbers, something like that, where Disney doesn't profit or doesn't meet expectations, and investors panic, so they sell the stock and it gets driven down. If you're long term, you don't freak out when other people freak out. You buy into the panic. I think it was man, and I'm trying to like really reach, but I think it's J.P. Morgan or Pierpont, whatever the hell his name was, but like the original back in the day, who started J.P. Morgan, who started the banking and all that. One of his more common, I won't say common, but like more famous quotes, whatever, was like, when there's blood on the streets, that's when you buy. When everybody else is freaking out and losing their shit because their stock is plummeting or whatever, that's when you buy in. You want to buy in at dirt cheap prices in good companies, not bad companies. Don't get it wrong. You want to buy in dirt cheap prices at good companies. And then you just wait. Once the dust settles, once everybody calms down, the stock market's going to do what it always does. It's just going to continue going upward. And then when it gets to a good peak, like in here, like you just watch it right up. Like let's say everybody freaks out right here, like at $26 on Facebook. Everyone's like, oh my God, fucking, I don't know, like Facebook had a bad quarterly report. Somebody was at the company and there was like they got injured, and just all this awful stuff happened, and boom, the stock sharply goes down because of it, like on bad news. When everyone else is selling and getting out, that's when you need to buy in, because you're long Facebook. You're buying and you're holding it. So you buy and hold it here like at $23, and then you just let it ride for like months and years, and then you see another dip right here where Facebook bought a company, and then that company didn't make its numbers for whatever reason, so investors are panicked that Facebook doesn't know what they're doing. And there's another nice dip here, and you buy that dip. And then you just ride it out. You keep going because Facebook's a legit company. It's not going nowhere. And then there's just like this teeny little dip here where people sell off and they worry that, oh my God, like Mark Zuckerberg he doesn't know what he's doing. He's not running the company properly, whatever. And then you just like, you know what? I'm going to buy more of it because I'm long Facebook. I believe in this company. And then it just keeps going up. You have to keep that mentality, or no matter what happens with that stock, you have to understand, when you initially buy it to hold it, you're doing two things. One, you're finding a good price point that's cheap to buy in. And two, you're looking at the long-term value of it from year to year of how it's going to be. Because you don't want to buy in just every month and just be like, oh, I'm going to buy more, I'm going to buy more, I'm going to buy more. Because you could be buying at high prices. You want to buy in lower, so whenever there's a dip for whatever reason, and then it continues upward. You want your gains to reflect, of how you're buying, how you're buying your stock. At the end of the day, it's not how much money you make, it's how much money you keep. It's how much money you keep in your account. That's what matters. And that's one reason why I trade with Robinhood, is because I don't pay fees, so I just keep more money in my account. But on top of that, I don't buy when everyone else is buying, because that price is jacked up. That price is is fucking on steroids, you know, like, because everyone's buying it. It's like the hot stock. I'm patient, you know. I'm determined. I'm diligent, you know. I'm waiting for that right point when for whatever reason something bad happens, people freak out and it drops down, you know, 5% or more, whatever, and that's when I attack. That's when I get in. That's when I buy the stock. Is when everyone else is freaking out about it, because I know this company is going to continue going upwards. And this freak out is just a momentary point in time where history has proven itself more and more, where people, something bad will happen, like the 2000 crash, people forgot about it. It ran up to 2008. And the 2008 crash happened, and then people forgot about it, and then it ran up to like 2017, you know? People forget history so much. People forget the things that happened in the past, like almost immediately. Like they'll talk about it for a while, and then they'll just forget about it. If you're going to trade stocks, you need to be smart. You need to remember these things. You need to remember patterns. You need to remember cycles. There's not a decade necessarily, but an 8 to 10 year cycle, a debt cycle, where stocks just kind of go up and down. It'll drop in percentage, and every 1 year there's like 3 or 4 times in that year where the stock just takes a hit. It's not necessarily a huge hit. It's like right here where the stock goes from 67 to 57. It just drops $10, and it doesn't sound like much. But for whatever reason, at this time, there was a market correction, or there was a freak out in the market where somebody gave a bad report and it took down every company in its sector, or for whatever reason. That's when you need to have the clarity of mind to attack. That's when you need to have the mindset to get in when everyone else is getting out. Okay? Now, I'm not saying you buy into a shitty company. You know what I mean? I'm not saying you buy a bad company when everyone's getting out. If it's a bad company, get the hell out. But if it's a company that you know has been around a while, and then you've looked up and you've done some research on it, and you understand the company, what it is, and how it impacts everybody, and how it's going to be in the future, you invest in it. That's what you are when you do buy and hold. You're an investor. You're going long term. And I do most of that when I do my personal, like, IRA and 401k accounts. Because I'm going long with those accounts. I'm planning out 30 years, you know? I'm planning out, you know, buying a home wherever and sitting on my ass and not doing nothing, and having a very relaxed life, because I planned so far in advance that I pick a few stocks that I know are going to do well, and then that are going to continue growing, regardless of the economy, regardless of who's the president, regardless of the rhetoric about the company, regardless of earnings, regardless of all that. I'm going to continue with my strategy because I know it works, and I know this company, I know it well, like I researched it. So that's kind of like, and I know, like, the buy and hold strategy, like, it sounds simple, but when you break it down, you got to have discipline. You got to have, like, a steady hand. You know, you can't get emotional. If you bought, like, Facebook, like, let's say right here at March 3rd, 2014, and then, you know, May 5th, 2014, it dropped down $10. Most people will freak out because their stock dropped like $10. They'll freak out, and then they'll sell. And what they did is they sold at a price where they may have lost money because they didn't have faith in the company. If you're buying and holding, you need to have faith in your company. You need to have faith in the product. You need to have faith in where this company is going. So don't just choose any company. Choose a good company. Choose a big company. Choose one that's been around. You know, and just keep adding to your shares. Just keep adding to your position every time there's a dip. Now, like I said, I'm biased towards tech companies because of where I live. I would encourage you guys to pay attention to companies where you live, because you, in a sense, have kind of like inside information on it because you live in the area. So you might hear about things about that company before the rest of the United States or the rest of the world even hears about it. So you just need to keep that in mind. It's not always what is the hot stock. It's what you believe in. It's what you care about. Because you could listen to what I'm saying and buy Facebook, and it could dip tomorrow, and you could hate me for it. You could hate me because you believed what I said, and then the stock went down. If you don't believe in the stock and where it's going, you only have yourself to blame because you didn't do the research on it. You guys need to take the time. You need to do the homework on it. You need to understand, like, if you're actually into stock trading and you're into having a successful career at it, which I'm trying to get better and better. Like, I'm not trying to pretend like I'm the greatest at it, but I've done well for myself, and I want to continue to do better. But I also want to try to share this knowledge with you guys because I've been doing this by myself for so long. Like, I have nobody to really talk to about this, and I understand that there's a need for this information for you guys, and that's why I'm trying to give it to you guys. I'm trying to answer your questions. When you guys leave me comments, I'm trying to answer as much as I can. I'm trying to help you guys because I understand that I didn't have that information. I didn't have somebody to ask. I didn't have people answering my comments. I had to figure this out myself. But just understand that when you guys do the long-term buy and hold strategy, whatever stock you buy into, you need to believe in it. You need to believe in that stock, that it's going to continue growing. And then whenever that there's bad news or whatever with that stock and it brings it down, that's when you need to buy. When everyone else is freaking out, that's when you need to buy. Because when they're selling their shares at a lower price because it gets dropped down, they're losing money, but you're going to gain money because you bought it on a discount. You bought the Black Friday sale. You bought the fire sale. You bought the sale of the century because you bought it at a much lower price than what the company's actually worth. And then when it runs up, depending on your strategy, if you buy and hold, you just let it go. But if you're a day-to-day trader like me, once that stock runs up to a good enough point, you just sell it. And then you profit again and just let the company keep going. Who cares? You made your money. Get out. But if you're doing a buy and hold, you need to take advantage of everybody else's ignorance and fear when they worry about the stock. That's when you need to buy. That is the buy and hold strategy. Whenever you see these dips, like right here, whenever you see that dip right there, that's when you buy. Whenever you see the dip right here, that's when you buy. Whenever you see this little dip right here, that's when you buy. You need to take advantage of it. You need to believe in your stock, whatever it is, that it's gonna go the long term. And you need to believe that even when everyone else is freaking out and there's bad news on the stock, it's still gonna continue upward, and that's when you need to buy. Now again, I know this video is getting drawn out long, and I apologize, but you guys just need to. It's a hard concept to understand. It's simple to explain, but it's a hard concept to understand because people get emotional with trading. Believe me, I've done it. I still do it from time to time. I have to check myself regularly. And it's almost like to the point where you have to have that conversation with yourself. Is like, don't do it. Don't do it. Don't sell. Don't sell. Don't freak out. Everyone else is freaking out. Don't do it. You need to understand that if you believe in the stock, and if you're doing a buy and hold strategy, which means you're going long, you need to just hold on through the pain. All right, it will get better. There is a rainbow at the end of the tunnel. There is sunlight coming. You need to believe in it. So just keep that in mind when you guys do the buy and hold strategy. You're in it for the long haul. You're in it for the full run, okay? And like I said, me personally, because I'm biased, I like tech stocks. So I would buy Facebook, Amazon, Netflix, Google, eBay, PayPal, Salesforce, Workday, any like tech stock, like I'm interested in those stocks because that's the area I live in. There's a lot of tech stocks, so I hear about that stuff. So if you were to go with a company, I would recommend it would be one of those or a tech stock. Those have good growth. They're pretty volatile, so they can make money quick for you if you watch the stock really well. But also you have to look at what sector, because tech could be in any sector. It could be in finance, it could be investing, it could be clothing, it could be whatever. So it's whatever specific sector you want. But in general, I like tech stocks because, like I said, that's just the area where I live. I hear a lot about tech companies a lot. I see a lot of the advertising. I usually get to it first because it's just in my area. All the companies are, all within a driving distance from me. So that's just my bias towards it. Wherever you live, try to focus on that because you gotta like the company. You gotta be interested in the company. You gotta look long term where it's gonna go, and you gotta believe in it. That's the buy and hold strategy. You gotta like the company. You gotta know where it's going, and you gotta believe in it. Okay, you can't just buy a random ass company and hope for the best. No, you gotta understand the company. You gotta understand the quarterly statements. You gotta understand where the company's investing. You gotta understand the products that it's selling. That's the buy and hold strategy. You have to understand the fundamentals of it. You could use Seeking Alpha. I use Seeking Alpha. I did a video on it. It's a great app to have. It's free and it does a bunch of articles on any stock you could fucking imagine. There's a lot of information on there for you guys to read. But anyway, that was a much longer video than I wanted to do, but I just really wanted to try to give you guys as much information as possible. And I apologize. I'm trying to keep this video shorter because I don't like watching long videos myself, but I want you guys to have, you know, the one thing with this is you could watch my video and then you could watch 7 other videos from 7 different people, and you take a collective of the knowledge and experience of everything that people are giving you, and it's such a good strategy. So watch this video and then watch other videos on buy and hold strategies. You know what I mean? Like, don't just take my word for it. Like, listen to as much people as possible to expand your knowledge, to increase your understanding. Don't just limit yourself to what I'm telling you. You guys really need to learn from other people. Take the time. Like, you got to do homework. Straight up, I'm not gonna lie. You gotta do a little bit of work at this. You're not just gonna pick the luckiest. You're not playing the lottery. You're not just gonna pick one stock and then boom, it shoots up 1,000,000%. And then you're set for life. This isn't the lottery. This is work. This is a job. This is real. Like, I do this as a hobby, but I like it. I enjoy it, and I like that I can share with you guys my experiences to help you out. Like, that's really making my day, and seeing you guys comment on this and leaving me questions, and I do my best to answer, makes me feel like you guys understand, you guys care like I care, you guys want to grow like I want to grow, you guys want to get more for yourself, like I want to get more for myself, and like I'm doing the best I can. I really am. So if you like this content, like, leave me a comment, ask me a question. I've done my best to answer everything, and I even make videos. If you guys ask some really good questions, I want to give you guys that content so you guys understand a lot better. But that's kind of just like the buy and hold strategy that typically works in like a majority of the situation. You just have to cut out emotion. Just, if anything from this long rant, if anything from this long rant, just, you have to cut out emotion. You have to believe in the stock. You have to know the company. You know what I mean? Like, just think about those things. Like, you're not gonna pick it up in one day. It's gonna be something that you have to work at. But I've done it. I've benefited. Other people have done it. If you're watching this video, you can do it too. I guarantee. You just have to put in the time to learn. That's it. While everyone else is watching TV shows and whatever, and laughing, ha ha, blah blah blah, you're on the internet watching these videos trying to learn. And you know what? You got my respect for that, because I do the exact same thing. I try to educate myself, and I try to get better. Not just for myself, but for these videos I make for you guys. I want to give you guys the best information possible, and I want the best information possible. So I continually educate myself, and that's what you guys need to do. So Again, I apologize. It was probably a super long video, and I'm sorry, but hopefully it helped you guys. And the guy that asked me, like, it was a really good question, so I definitely wanted to make a video on it to explain it better to you guys. But if you got other questions, man, ask me. Leave a comment. I'll do my best to answer it. Click like and subscribe on my channel. I try to get to you guys, as soon as I can, and we'll keep this thing going, man. Let's keep the information flowing. All right, you guys have a good night.